Morning, everybody. Dr. K isn't here right now. He's a little bit preoccupied, and hopefully we'll have him on a little bit later. But I was going to go ahead and start today's webinar. And you can see here, I've converted over to eSignal 12 point something and away from the old 10.6, which I've been using for a long time. And I found this actually isn't that hard to set up, and it's much cleaner looking. So you may notice a slight difference in the charts, but I think it's pretty minor. In any case, you can see the market's getting hammered. And personally, I don't see this as being all that surprising because the main issue for me, and I don't care if you're seeing a bunch of pocket pivots, who cares? A lot of them are junk, and you can see plenty of pocket pivots as the market's selling off in individual stocks. Doesn't mean that you're going to make any money. And I think in some cases it's dangerous to be buying them. But the main issue, I think, you have the Nasdaq advanced decline line here, and see how you've just continuously made lower lows. Now in this last rally or bounce, you haven't had much of a recovery above this prior low, so you're basically making lower lows and lower highs in breadth. If we go to the Nasdaq, or New York rather, NYC advanced decline line, basically see the same thing, and this has been going on for a considerably longer period of time. In fact, if you go back, say, let's see, by the way, this is stockcharts.com, as you can see, which I actually like. It's a pretty decent service and it's reasonably priced. I use it as a backup system, and you can load lists into it. So I keep a lot of different systems around. So I know a lot of you ask about that and want to know what we use. I use everything pretty much, so because I have no problems affording stuff. So in any case, you can see here we're in basically a trend channel to the downside with breadth. So then that's not looking so hot. Market coming off, I kind of thought, I'm looking at, well, let's look at the indexes, right? Here's the Nasdaq. Let me see if I can get this to do what I want it to do. Here we go. And you can see you're blowing through the 50-day line here. Let's see. I'm going to make this a little bit bigger. Blowing through the 50-day line, through all of, 10-day, 20-day, everything. You're just blowing it. And I think you could have seen this coming because I think the breadth has been very poor. I haven't really cared much for the quality of pocket pivots. You jump in, you buy something like this, and there's a pocket pivot. It's like, okay, big deal. You get this, there's your surprise. So I'm not so sure you need to be acting on buy signals. That's my view. And I've been bearish for, if you follow these webinars, I've been bearish for at least the last week or so. And I don't like what I've been seeing in terms of breadth. And so we're seeing a lot of that come to fruition. So, Nasdaq busting below the 50-day, heavy volume today. S&P busted through its 50-day yesterday. Maybe it's headed through the 200-day now. And if we look at also the New York Composite, you can also see that it basically ran into resistance yesterday. Let me make this bigger. Right at its 200-day moving average, the red line here. So it reversed off of there and headed lower. So it provided the context for the reversal. And I think today you're seeing it's basically a textbook bearish reversal today to the downside on heavy volume. It doesn't look good to me. So, if you, again, you want to be taking profits into upside moves, and yes, you're not going to be perfect. So let's, so anyway, so we know the market sucks. We can pretty much agree on that, I hope. And so let's look at some stocks. So when you have nice moves in stocks, such as if you bought Netflix off of the 20-day line here, I'm going to make this bigger. On the Voodoo pullback, so you had light volume pullback here, held the line, turn and you go. Now, from here to here, you're up 8%. You're near the highs. So if the market's in trouble, you would probably want to take at least partial profits. And then if you're going for it, you can use the 10-day line as your stop, or you can use your entry point as your stop if you're going to go, full bore going for it, which I don't really advocate in this market. You get an 8, 10, 15, 20% move in a stock, you've got to start thinking about taking at least some of it. And here we have Netflix actually got over 17% above the 20-day on this move, which is about 6 days now in duration. So 5-day move, but it reversed yesterday. Try to go to the highs again today. You're reversing again. I think you got heavy volume running today. Pull this out of the way. Let me see. Yeah, you're running 85% above average for this time of the day, so it's looking very grim. So another one, Skechers. Yeah, this one, you could have done very well on this one. All you do is buy the Bible gap up here and do nothing after that until you finally decide to sell into this second move, which is getting a little frothy at this point. So I don't see any problem taking at least half profit. So if you did pretty well with this stock, no reason why you can't bank at least half of it. Anyways, if you get too piggy, like Mobileye, what is this? Here's your, yeah, if you bought it here, this is where I thought it was buyable. You could have sold into this move. You could have bought it back in here on the pullbacks to the 20-day, get a couple of them. They don't look so great because they're on heavy volume, so it's questionable as to whether you would even step in. But if you did, or even bought this Bible gap up here, you made some decent money pretty quickly. So why not take it? And it's starting to look a little wobbly up here along the 10-day line. You can see the higher volume here and here and here on the downside, and then these two reversals off the peak are on 62 and change, say 62, 63. Those don't look good. So not a big fan of those. So, and somebody says I did very well with SKX in and out. That's good. That's what you want. Wham bam, thank you, ma'am, or sir, as the case may be. Anyways, okay, what do we want to look at here? Let's go through my magic list. And I think this is a list of everything I'm looking at right now. So I'm going to pop this in here, bring this over here. This is what I like to do when I'm going through charts. Facebook, I thought it was a short this morning. I actually shorted it. It's up at the peak of this range here. And my thinking is that, I spent 8 years at O'Neill advising institutional investors, mutual funds, hedge funds, bank trusts, you name it. And so I get a sense of how these guys think, and I know that an institutional money manager's biggest fear and what keeps them up at night is not necessarily a bad market, because all they have to do is track with their bogey, which might be the S&P 500 index or Russell 2000, whatever. As long as they perform even with that bogey, they get to keep their job. So their biggest fear is losing their job. So, Facebook is a big stock. You can't get in trouble for owning Facebook, with every analyst on the street putting a 110 to 115 price target on it now. So they're going to step in and buy it. But I think once they're done hiding in it, then it gets the gooey kablooey, and we're out of here. So we're down 127 now on the Dow, and so this thing's outside reversal on heavy volume. I anticipate this will be a very nice short here. A couple others that look shortable this morning. Biogen, they open it up. You can see you get the shortable gap down, and the high is 327. But the issue here is not whether it can go past it. The issue is whether is simply that provides a reference point for an upside stop. So you stay disciplined. If it pushes through, you cover, and then you look maybe to get short again. Now you might get short the stock higher. You might get short the stock lower from where you covered it here on the stop out. But my advice on the short side is when you if you set a stop on a trade and you hit it, you should just follow it, because you can always short the stock again. And I can tell you, when I haven't done that, that's when I've gotten into a lot of trouble. And so just stick to your stops, okay? It's a very simple concept, but one that anybody would agree is easier said than done. So let's see. So yeah, Biogen, good. So here's at the 10-day. I'll cover it and bank my profit there, and then I can work some other stuff. Like I thought Las Vegas Sands. If you look at this thing on a weekly chart, you see it's a huge Head and Shoulders broke down. I think I was talking about this one short around in here, probably, if it was on my screen. Let's continue lower, but it's just gone chopping sideways up until it runs into the 40-week line, the 200-day line on the daily, 40-week line on the weekly. And so you're looking for some resistance here. You notice how these 3 weeks, boom, boom, boom. You throw in this one too, these last 4 weeks. Let's make this bigger. Right here, in the month of July, market's still coming apart here. You're stalling and you're closing the lower half of the weekly range. So that's kind of weak, and you can see it a little bit here on the daily chart. So yesterday it goes up above the 200-day, right into these highs. Could be shortable. You can use the 620 chart. Let's go. Workday is another one. Shortable up here at the 20-day. Notice how here's the gap down window. I call it a falling window for a gap down, but it rallies right into the 200-day and the lows of this window, falling window. And here you can't get up as high and you're rolling over. So that was a good short there as well. Splunk, another failed breakout attempt here. Boom, gets hit. And notice this one has no volume, so it's essentially a buyer's boycott. But the buyers don't seem to want to come back because you're seeing a pickup in selling volume 4 days ago and 5 days ago. Well, 4 days ago, we'll say. And trying to hold, but now you're breaking, you rallied back into the 50-day, which is tracking along with the 10-day, the magenta line, and the 20-day, which is the green line, and now it's reversing to the downside. That was another nice short. Even Intel, I think, is going lower from here. So this is a nice safe short for anybody who wants to test shorting at. Use 29.23 on the 20-day as your stop. Hit the stock here. You got about 1.5%, a little less of upside that you're going to allow it before you cover it. But I think the whole semiconductor space is just coming apart. One of my favorite shorts, and it's worked very well over the last couple of weeks or week or so, is software or Skyworks Solutions. I always want to do that. I want to keep calling it Skyworks Solutions, but it's or Software Toolworks rather, but it's Skyworks Solutions. In any case, the stock comes out with earnings here, gaps up, and that at that point, if you're using the 620 chart, there was a short point right around I think 105, and the thing just plummeted. And for 2 days, so you get about $10 on it, 10% on it in 2 days. So I'll generally take that because you're undercutting this low, and then you can set up again near the 10-day, if you know, or the highs of this. You see the little gap here, so you come right up into the top of that falling window right here, and you approach the 10-day. So you can be watching your 620 right here, and look to time a short. Yeah, it's getting fun. I see Facebook heading lower. Is that what's going on, or is it? Yeah, roughly. I think it'll be down, heading for the 50-day at least. Maybe it's even topped, and right at the $100 price level. Coincidence? I think not. In any case, let's look at some other names. Netflix, I think I looked at. Just sliding down. Cyber, garbage. You know, short at the 50-day. So you could have shorted if you can borrow it. Where I'm at, I can't borrow it, so I'm not going to worry about that because you can't kiss all the babies. But that's a short, and now it's starting to look like a head and shoulders. See that? And it was initially a failed base, and frequently you'll see a head and shoulders formation. When the head forms, the head is actually a failed breakout. So this is one of the ways I was looking at how to get jump on a short earlier, because I noticed the break on the right side of a head and a head and shoulders formation is a pretty nice downside move that can yield pretty good profits on the short side. So I wanted to figure out how to play that, and then what I noticed is that a lot of these heads form as a result of a failed breakout. So here's your left shoulder, maybe another left shoulder, and then a head and a failed breakout. So this is shortable in here at the 50-day, and then rallies up again to the 50-day shortable, and again to the 50-day shortable, probably just building a series of right shoulders before it heads lower. So a little bit of a pin head and shoulders chart too. If you go back, I think in the first short selling book, you'll see a model of or a chart of research in motion when it topped out. I think in 2000. Oh, I forget, 2002, 2001, 2003, sometime in there. But when it topped, and what it looked like at that time. So, and also in 2008. But then one of those years, I'm trying to remember, it did have a sort of a pinhead and shoulders. I don't see any questions. What are you guys all asleep today? First Solar, Fizzler, nice gap up move. You could have bought this in the morning once you figured out that that was a low, but it's kind of crazy. And started coming in, then it turned back and went higher, and now it's coming back below the 200-day. But that set off a move in Solar City, which I sold into, bought it, sold it. Now it's busting because the market's busting. Nothing's going to hold up. Mobileye came out with earnings. Nice. We already saw that. Solar Hedge comes out with earnings soon. But remember, this is starting to look like a head and shoulders too. So not getting any traction along the 10-day. So not good. Bad. Let's cruise on lower here. Anything else I got here I want to look at? Oh yeah, whoops. Ambarella. Looking like it's going to bust. So I thought maybe it would hold the 20-day moving average here, but this could just be a double top and it's heading lower now. So, and this is your climax top, which if you look at it on the chart, that's pretty coherent. In other words, you don't see any crazy big, you know, if you saw a 20-point upside move, 15 points or something like that, then maybe, let's see, what was this here? That was about 12, yeah, 20 points or so. I think something is really streaking here. It would have looked more climactic. So it had a little little baggage to work off on this rally, and now we're getting the sellers coming back after the stock. So where's Dr. K? Dr. K is in party mode, I think. I'm not really sure, so, but I don't really have time to worry about it. Twitter on the shortable gap down through here, boom, busted. PayPal, keeping an eye on this one. I don't know. Somebody's telling me it's a U-turn. In fact, an old O'Neill sales rep texted me telling me this is a U-turn, but it's not. You go 1 week down, 1 week up, 2 weeks up. That's not. It's got to be at least rounded like 3-4 weeks at the most. So that's too small. It looks like it on the daily, but that ain't gonna hold up on the weekly. Shop till you drop is now dropping. And I didn't think this was a viable gap up. If you wanted to buy it down here on these pocket pivots, that was feasible, or you get the low volume pullback here into the 20-day line, and again here. Those are feasible as points to attack on this pocket pivot. But now once you get into earnings, if you held it there, I wouldn't try to buy that. It's too steep. We talked about this last week too. This has more of a look of an IPO pod than it does something constructive. So, be careful with these viable gap ups because they're not working, and you'll notice a lot of things will start to fail. Somebody's asking about this one, Sucampo. It's pulling back to the top of this little flag, but I don't see anything here either way. I'm not going to buy it in this market. If you bought it lower, maybe you think about taking a profit. I don't know. Where's your stop? So I'm going to tell you, if maybe just asking my thoughts on this, but it's a breakout again. I don't trust it, okay? But if you own this stock and you're asking me what I think about it in order to figure out what you're going to do, then you shouldn't be trading to begin with, because you should already have a plan for selling this thing if it starts to break down, okay? I really don't like this business of people, asking me or emailing me, what do I do now? This stock is on, like the classic one I think was a guy who had SLV back in, when did we first identify this thing? The pocket pivot occurred way down here, right here, off the 10-day and the 20-day. And so it was viable at that point. It had this huge move, and then we told everyone quite openly, and I was on TV saying this thing probably goes to 50. Silver went right to 50. It's a sell right there. Take your profits. And it breaks down. We get some guy emailing us that he owns it somewhere down in here, and he wants to know what to do now. So, I mean, it's like driving your car off a cliff and asking me, how do I prevent this? Oops. Anyways, let's go through some more names here. GPro. GPro is probably going to roll over with the market. So I don't think you want to be buying anything. So if you're looking around for stuff to buy, I'm not looking around for stuff to buy. I'm short up to my eyeballs. And all these stocks are coming in. And I'm probably going to be ticked off that I covered the Biogen here to take a 10-point profit or so, whatever it was. But I still got Facebook short, which I think is toast. And I've got some LVS out there and some others. This thing's rolling over, so this looks good so far. Google. I think it was a short. It came right out. This is my new BGU's gone bad. Bible gap up's gone bad. Short sale theory. When you have a Bible gap up late in the, what might be late in the cycle, you tend to see these things fail. So that's why you've been seeing a lot fail. So the other thing you want to see is sort of negative action underlying the market. So the theory here is that if the market's really weak, the Bible gap up won't work. And I think most of them do fail as a result of the general market. I mean, look at some of these. So let's just go back. Remember Biogen on this one? That was a sucker move if there ever was one, and they sold into it. Boom, boom, and now it's just heading lower. And here we are rolling again. So, all right, where was I? What stock was I looking at? Somebody asking about Google, that's right. Here we go. So you got resistance here at the 680 level, which is right around the low of the Bible gap, and it reverses. So I think if the market continues to get weak, this could fill the gap. So I'd be looking for that. First stop, though, would be another undercut of these lows and hit the 20-day. Those are my scenarios if I'm shorting this and where I might want to cover if I'm working it. If you're running a smaller position and looking for a more strategic move, in other words, an intermediate breakdown over time, and something that you might I know there are some guys out there who initially shorted Las Vegas Sands when I talked about it back in here, and they're still short it and waiting for another leg down, and they may very well get that. So there's two ways to approach it. Smaller sizes, a more intermediate view with the idea of taking your positions at the optimal point and then hanging out, because some of these things do break down. But you have to have a lot of conviction and staying power, and that's one of the reasons why you operate on a much smaller basis with a smaller position. So how do you trade Bible gap up such as ABMD? I don't know. My view is, do you know how to, if you know how to read a book, you could read our first book where we talk about Bible gap ups, or you could go on the website and figure out how you handle Bible gap ups. The bottom line is you use the low of the gap up day as your stop. What you're using as a profit-taking mechanism, but figure if you bought it in here, you're up a good 10% maybe right now. So what is your profit objective? Or are you just going to sit there with it, and if the market just blows up, the stock comes in hard? My view would be, if you got a profit, use the low today as your stop. Sell half. This is how I would do it. I would sell half, use the low, or all of it, and use the low of today as your stop around 92.30 trailing. So because the market comes in hard, this thing will come in hard. So nice move though, and it's a little bit later stage. 1, 2, 3, 4. Yeah, it's a few bases in there. Let's see. Amazon I think is holding up, isn't it? Nope, it's starting outside reversal, so this may be a shortable one. This is one I've been thinking might be BGU gone bad, but so far it hasn't really gone bad. You get a little porosity here where it dips below the low, but it doesn't really break down. I mean, you're within 1 or 2%, I think, of this low, maybe 3, and now you're going sideways. Remember, the longer you go sideways, the more the potential for this thing to blow wide open and break to the downside and fail. So the better the potential for it to become a Bible gap up gone bad or a BGU gone bad. Cable TV show to come on that one. BGU's gone bad. I don't know. Anyways, I won't get into the visual imagery that's going through my head right now, but you can see the other thing here, what I think is interesting, it's sort of a reverse flag, a bear flag. You get the long pole here, and then you get the tight flag, volume drawing up. So is this going to break to the downside? Maybe so. I think we'll find out, won't we? But it looks like a short. I could have shorted today at the highs, which are 543.67. Hold on a second. Let me get something here. The high here was 542.74, so I could have shorted it there. There were a number like that. I mean, Biogen 2 was up. Google, I think, opened up this morning. And only a pinch. And then boom. And that's how a lot of stocks acted today. They just got hammered right off the opening. Everything kind of lifted its head briefly, and then somebody played whack-a-mole and just smacked everything to the downside. It was beautiful. Well, if you're shorting it, it was beautiful. If you're dumb and long, then you may have some issues. So somebody says, I'm new here. Do you trade options also or only stocks? I don't trade options, but I don't see why you could not implement options, with pocket pivots, or even short on the short side. So trying to use some of these setups, and in some cases, if you can get a nicely priced option or a cheap option on something and get a nice move, your leverage is pretty good. The question is, do you buy enough to really score, given the volatility of options? So, and I've had periods where I remember in 1997, October 1997, when the market went down 500 points, I think on October 27th, 1997. You can check that if you want. I'm not going to bother with it right now, but I remember I was 100% in puts in all these different stocks, like 6, 7 different stocks, and my account doubled overnight. And then a day, I decided to be piggy, and then a day later,
Hey,
everything turned.
better late than never, right?
Always. Everybody has been wondering where you are. So I told them you're probably out partying because it is afternoon out where you are in Pretoria, right? South Africa? Is that where you
Well,
are?
no one parties better than the eighth dimension. So,
No.
but eighth dimension and third dimension are actually right next to each other. So I was able to
Excellent.
blink in a flash
Well,
and
how
be back.
about, I've been going through all the stuff that I've been shorting. So well, how about if I take a break here and let you do your thing, and you can talk about certain names and what you're looking at right now. So let me let me turn over the keyboard and the mouse to the illustrious Dr. K, which I'm sensing is probably in one of his most illustrious states. So currently, so okay.
Illustrious.
Illustrious,
Indeed.
bubbleiciously illustrious. Anyways, okay, go ahead. I think do you have the controls there? You like my new setup here? It's eSignal 12.NX, whatever. I don't know. You got it there, Dr. K?
Yeah, I'm just noticing one chart, so it's a different format.
Well, I can show you if you want. You can look at. I have the index charts in here as well. So that's the index charts here. So it's the same type of setup. So slightly
oh, there
different.
we go. Yeah, cool.
Yeah. So whatever you want, that's all here for you.
Great. Well, as we can see, we've got the major averages. The S&P is well under its 50-day as we speak. Yeah, I was trying to get above the 50-day, closed above yesterday, but as I pointed out in one of the pre-market pulse reports, you know, it's making this 50-day a bitch because it really has no respect. It's going to close above and below it, and it doesn't really matter at this point, this juncture, what the 50-day is doing or where it's at. The 200-day still seems to have some integrity, and as we speak, the S&P is a breath away from the 200. The Nasdaq is now below the 50 and still quite a bit above the 200, but it's had a lot of strength relative to the S&P because of some of the tech names that have done well, like Amazon. But you know, we remain in this very choppy environment. I also pointed out about how you know, the Nasdaq has a tendency to hit new highs for a couple of days and then it rolls back over. So it makes for a very frustrating trading environment in terms of market timing. The S&P is even more challenging because it really doesn't hit new highs, or it hits new highs for a day or for a fraction of a day, and then it rolls back over. So these are the times for the right kind of stock picking, and this year, you know, we're 8 months into the year, we've seen a number of excellent names come through that have offered trigger points and have done very well. I've enumerated a number of these names in prior webinars, and so as far as position sizing and getting on board the right names, there have been more than just a couple of these good names that have done very well as we've seen this year. So in other words, you know, there's people who just get so fed up with the whole market timing business because it's, you know, this is one of the most challenging non-directional environments. I mean, you can't make money in market timing if the market's really not going to do much of anything. But I say to those people, look, there's a number of investors I know who've done very well this year because they've hit the right names. They've hit the right names like SKX. I mean, there's quite a few of these names that have done well. And if you had bought at our, you know, at the time we sent out the report, and then maybe pyramided or managed your position accordingly, taking profits where you have them, then, you know, you could easily be up 20–25% this year. There's a couple names here I'd like to go through. Just recent names like, let's see, is this box coming up? I'm going to put up LGND. Oh, there we go. So this is something we put on the list way back in May 19th. Let's see here. So May 19th, which is back in here, and you can see that this is a stock that just does its thing and it keeps going higher. And I put this one up because it's instructional, because we put it on a list yesterday because it had a pocket pivot, as you can see right here. But today it's, you know, it's shutting down. So had you bought this stock back May 19th, and it never seems to get really much ahead of itself. It just kind of does its thing. You may have continued to hold the position all the way up to our second recommendation yesterday when it had another pocket pivot, looked strong. So if you added to your position yesterday, then today you sell everything. You don't sell what you bought yesterday. You should sell everything. You take your profits on the on what you bought on the 19th of May, because this is not normal action. You can see how far down this stock is. It's down the most it's been in this particular price history. So that would make me nervous enough to take my profits in this kind of environment. We know that stocks take the stairs up and the trapdoor down when they want to head lower. Another stock is ACHC. This is one we put on the list May 27th. So that's on this day, had a nice little pocket pivot breakout, and it never went below the low of the pocket pivot day, but it was fairly choppy and sloppy in its price action. So if you sold it in that action, don't kick yourself, because it wasn't behaving like a proper pocket pivot should. But maybe you kept the core position, and had you kept that core, then you rode to some profits. And then we put on the list yesterday, and had a big up day, I think, on strong earnings. And today it's retracing on lower volume, so it looks about right. It's not doing anything particularly alarming, and you could sit with the position, especially given how the market's behaving today. I mean, the major averages are off almost 2%, and yet ACHC is only down fractionally relative to what it did yesterday. So it's showing a sign of strength relative to the overall market, and if you bought any yesterday, I would say sit tight for now. But if the market gets any worse, if the selling starts to accelerate, or we get some sort of deleterious action to the upside, low volume wedging action, then you want to keep yourselves very tight on any long position you have, because the market might be telegraphing that it wants to break down through the 200-day. The S&P, as I said, it's a breath away from its 200-day right now, and maybe it's time for the markets to start to have a proper correction. We haven't seen a proper correction in how many years has it been? The S&P hasn't corrected more than 10% since, I believe, 2012. So we're talking like 3.5 years of no correction, no material correction in the S&P, and maybe it's telegraphing to us now that the QE has been churning away with the Fed in the U.S. and all of the central banks in other countries, and yet look at the S&P. The S&P can't seem to get off its horse. It's a sideways market, and it's been a sideways market in the S&P since late 2014. So in other words, we're coming up on the year anniversary of a very sideways market environment that just can't get any trends going. So that is telling me that QE is not the solution. It never has been, but really now it's not even helping the markets go higher in any sort of meaningful trending way. And that could be maybe this is the market telegraphing to us that this is putting in a major top. And if this is a major top, then we can expect to see some more meaningful corrections to the downside. And not only that, a 10% correction might look like child's play compared to what the market really wants to correct. And also, I think the market is telegraphing to us potentially that the Fed is going to be raising rates, say by January. My studies have shown that 4 to 6 months prior to the first rate hike, you get a material correction in the majors. And so maybe it's due. I think the futures are saying that the odds of a rate hike by January are quite high, something like 70%. So if that does happen and we're in August, we're right on schedule for a material correction in the major averages that exceed 10% and maybe even 20%. So keep your stops tight. We do have a number of leading stocks that have done well. We've had a number that have been for the watch list or actionable in the last few days. So leading stocks look like they're still doing pretty well. So don't take your eye off the ball there. Just because you think the market's going to have to go through a substantial correction should not mean that you stop investing in the right stocks at the right time. Because we've had, like I said, a number of these names do very well this year for our members. And with that, I'm going to turn it back over to Gil.
Okay. My tendency is to think that you don't want to own anything here. You don't want to be buying stocks. I mean, great, Acadia might be holding tight relative to the market, but if this gets a lot worse, is the path of least resistance higher or lower, and where do I really want to be? I think in that case, I would rather be out wishing I were in rather than in wishing I was out, because I think this can get pretty ugly very quickly. My general view is that the Fed is probably not going to raise rates. We're going to have a lousy jobs number on Friday. We'll see what that does, or tomorrow rather. And I think it's economic. I think what's going on in China is a big bubble bursting, and the desperation with which their government officials are trying to plug the dike up with is telling. You know, in Europe they're just going to print more money, so you got that going on. In the U.S., same story. Is Donald Trump our great hope? Who knows?
The savior.
I read, well, you know, I know it's easy to laugh at him, but if you think about it, he's not an establishment candidate. So
I'm actually not laughing at him. I'm laughing at the absurdity of where everything's at.
yes,
And if we're going to have a potential candidate for the presidency, I would prefer someone like Donald Trump than
okay.
you know, a lot of the buffoons that we've seen.
Yeah, he's not beholden to the big business. You know, I always think that we don't live in a capitalist society. You know, I'm going to go on a soapbox tirade. So let me warn you in advance. Please remove all young children from the room and sensitive pets like chihuahuas. In any case, I think in this country there's big government is in bed with big business, and that's what you have, and that's what perpetuates it, and that's why neither party really is a solution. And in some sense, Trump may speak to the sense of frustration here in this country because it's really messed up and getting more messed up and more Orwellian all the time. So he may have a chance, and you notice how he's being attacked by everybody, but I think that's because they're afraid of him. Even the other Republicans are afraid of him, but he may be what saves the Republican Party. That said, I would prefer to see a mixed government here to some extent. If you look at it, Reagan with the Democratic Congress was constructive for the country, and Clinton with the Republican Congress was very constructive for the country. Bush with the Republican Congress was destructive, and Obama with a Democrat Congress was destructive. Now we have opposing majorities, or opposing sides of a majority of Republicans in both houses, and we have Obama as president. So, you know, maybe there's some balance there, but I don't know, maybe something really needs to get done. The only problem is if you let both parties run the government, or one party run both sides of the government, rather, I think you've got a recipe for trouble. So it'll be interesting. But in any case,
you know, that soapbox could get a lot larger. The soapbox you're standing on could get a lot larger and
yeah.
a few more stories higher. But this, you know, I would love to say some things, but that would turn this whole webinar into a political webinar, and we're not about that.
Right,
but
right.
I guess the short and long is that I would love to see a breath of fresh air that may be able to shake things up the way things are done right now in the U.S. The rabbit hole goes very deep, deeper than most people are aware of. And the further you leave the U.S., when you go outside the U.S., you start to see more of this rabbit hole emerge, and it really needs to get away from the current level of bureaucracy and stagnation that exists.
We need to move on now, I think.
Yeah, well, there you go. I mean, you know.
Well, you're right, because this is not a political website. It's an investment, right? So.
Right, and it's going to also get people talking about the politics of this, because, you know, it's a big near and dear to a lot of people's hearts. So we should stick to the matters at hand, and that is making money. Right, and for that, I'm short up to my eyeballs, and a lot of these names are rolling over nicely. I'm watching Biogen come in. We talked about that just a little while ago. And pension under 320 now, 319.97. I knew I was going to regret that, covering it. I should just stay short. Oh well. One of my techniques, though, is to make
if I'm getting a nice sharp move and I've got 3, 4, 5 positions working for me, I'll take one out as it gets a little extended to the downside. And you're also coming into this little flag area here. So the 10-day to me seems reasonable. Maybe it goes kerploof right through it. But in any case, this is still weak. But you know, look around. Everything looks like garbage. This looks like, I mean, I can go right down the list, you know. GoDaddy looking good for a while. You had a pocket pivot here. You get that nice move before earnings. Better take it because now it's hit the gooey kaplooey. But everywhere, you know, Apple breaking. Whoops. Let's get Apple. There's Apple busting. Going lower lows, and probably if you look at this, you're on top of this structure now. See this base back here? Let me see. So it could bounce here, or it could just keep going right down. I mean, maybe everybody owns it, but you know, the big story is it's cheap and getting cheaper, and could get a lot cheaper. But again, we can go back to a couple of basic issues here. You have stock comes up here, 1 breakout attempt, 2 breakout attempts. Well, you could say 1, 2, and then 3, and then it fails, and that's 3 and out. So you get the breakdown through the 200. I was short this thing, playing this move earlier in the week, and it got a nice break, and I covered it here, but it's not clear. Maybe it goes sideways for a little bit. So I kind of like Facebook is short here. So hit this one today on a double top near the 100 level sort of setup. And I already talked about my theory behind that. So far that's proving out, so we'll see what happens. Tesla just getting raked today. Now this is morphing into, is this a shortable gap down? Not really clear. It is like a big bull formation, not really a pod, although you could say you have a slow breakdown of 1, 2, 3 waves, 4 waves, so ready for a turn at that point. You get a nice rally. No real big volume. See on the weekly chart as you're making higher highs, the volume is pretty feeble, and you're not getting strong volume as it's trying to break out. And the volume relatively over the last 5 weeks, you can see the downside volume picking up this week, and this week. So that's doggy. But you know, my view of the market, Dr. K, is I'm seeing a lot of these patterns in stocks just busting, and I don't really see many of these pocket pivots as following through. Although you're seeing more than a handful of them, they're not really following through to the upside. So I put a couple of things together, and that is breaking patterns along with buy signals that are not working, which equals troublesome market, and so far that's what we're seeing. So you know, my view is I think you can make money short, and there have been a number of names that I've played. All these are tactical.
Yeah, I think that you know, this year we've been in this malaise of a sideways market, and it has also been the year of profits if you're playing the right stocks on the long side, and therefore when we send out these pocket pivot review and buyable gap up reports, it's always under the condition that these are stocks potentially for your watch list, but not necessarily to be buying, because right now we're not out of the woods, and you know, the market looks like it's heavier to the downside than to the upside. And so, you know, these are viable stocks that if the weight of the market does come off, then some of these stocks that we're throwing out there could be the ones that are the next leaders. So I think it's important that investors keep these stocks on their watch list and monitor them closely. But in the meantime, if they do want to make money, I think the lower hanging fruit is going to be on the short side, finally, because it has been a very tough year for shorting.
Okay, so let's see, what are we doing here? We're down, whoops, 139. So I think getting ready to roll over. Let's look at something here. Bring up a new chart, and I will.
You'll get your wish finally.
Yeah, well, I made some good money short, and last year I would say being up 115%, half of that was from being short, even as the market was in an uptrend. So,
yeah, no, I mean this year. Last year I think was.
I don't know.
Last year was a great year for taking profits where you have them on the long or the short side, and then you could step your account up so that after every quarter you could be up, you know, like 10 or 15 or 20%. Now, if you compound 20% every 3 months, you're going to be up over 100% by the end of the year. That, I think, was the perfect way to trade last year's market. This market has not given as many opportunities on the short side. It's been a lot tougher a market. I think this year has been one of the hardest markets I've seen in a long time, simply because you look at the S&P and it's really going nowhere, not up or down.
Yeah, it definitely. I forgot what I was going to say, but I think the basic issue of the market here is not the Fed raising rates, because I don't think they're going to. I think it's the global economy, and I think the global economy may be on the verge of collapse. So, of some sort of collapse, some sort of black swan event, and that's the one thing that I'm wary of. And so I think that could create a great bear market to short it, but could be very difficult, because even the break in 2008 was extremely volatile. I mean, you would have days where you're up 300 points and then down 300 points, just these massive swings intraday. But it was profitable. So somebody says even the monster XON. So what I'm looking at here, XON is up, right? It is very good, or down rather. It's getting hit. So there you go. Okay, where was I? Let's back to the 620 chart, our handy dandy 620 chart. So we broke earlier in the day, immediate reversal on whoops, come on. I gotta make this no interval link. Here we go. Broke down right near the open. You started up and then we rolled over. Here's open here, and then you roll over pretty quickly. So you got this reversal very quickly, and now you're trundling along the lows. Seems to argue for further lows today so far. So, and if you're looking at some stocks, you've got, for example, here's how I'll hit Facebook. I actually catch it on this cross here, so that puts me in right around 98. And nice move so far today. And then you get your confirmation. You can generally add on here, and it's going lower. And it looks to me like it wants to go even lower. So that's looking pretty junky. PNW just hit the 50. Here's another big leader, and it's starting to get hit. You're seeing liquidation. That's what this is. So, and the thing with Facebook I was talking about earlier is that institutional money manager will pile into names initially. As the market starts selling off, you'll see some names moving higher, and you see Netflix like that. Facebook also moving higher, but what they're doing is they're piling money that they've blown out of other stocks into this stock, because it's a big index name, Facebook is now, and it'll help them track with the index. So they want to get weighted, and maybe this one's a little more volatile, so they want to get weighted more in these stocks. And you can't, like I said, you can't lose your job probably right now for owning Facebook. So VMEW rather, yeah, I mean everything's getting hit. Whoops. It's kind of like, tell me something I don't already know. Everything's getting hit, and I think this is problematic. So we're down 148. The Dow is probably on the verge of breaking its lows. Let's see. Yep. Any questions on specific stocks? GWRE is another one. Yeah, so the Dow is pushing for the lows now again. You can see on this 5-minute chart. There's another one. Yeah, they're all over the place. So it's liquidation, something that used to happen at one time, but everybody's got to get out of these markets in a hurry, and they're selling them today. Heavy volume, I think. What are we running on volume levels, Dr. K? Are real heavy?
Appreciably higher.
Yeah, so we started out lighter, so the volume has picked up, and I think this gets a lot uglier before it gets any better. So, we'll see. But I'm always watching for the ugly duckling to show up when he does. Let's see. Any other questions? We're getting to, it's 9:20. We got about 10 minutes. We can hang out here and look at other stocks. LinkedIn. This was a shortable gap down here. Use the high of the day as a stop, 209.90, and it just keeps going lower. But see, now you're undercutting this low, so it wouldn't surprise me to see some kind of a bump from here. And if you got up to 200, the round number probably would be resistance on the upside. Market's breaking the new lows now. Minus 150 on the Dow. Nasdaq is breaking new lows. You can see that. So it looks like garbage. Anyway, someone has a question for you, Dr. K. How is the VIX model doing today?
It's doing very well. I just I'm trying to contain my excitement because I don't really want to mislead in terms of getting people overly excited and putting, when this thing goes live, I'm going to write a very cautionary disclaimer to this model. The volatility on the model is very high. However, and I've tested this using my real money. If you can withstand that volatility, or maybe your position size less or something, your returns are quite extraordinary. If we go back to less manipulated markets that are non-QE, the returns are, I'm not going to say what the returns are. They're quite unbelievable, but they're let's just say the risk reward is the best risk reward of any model I've ever created. But I've actually tested this with my real money. So in this year, which is the toughest year by far, simply because look at the charts. I mean, the market's not going anywhere. It's a sideways market. This year, if you were to have taken every trade, and I didn't take every trade, that was my mistake. I'm up nicely this year. But if I took every trade, starting January 2nd, then the returns would be quite extraordinary as well in a sideways market. Just by sake of comparison, you take the hardest environment, which is this year, and you would be up well over 50% with, again, keep in mind there's drawdowns associated with this model. But if you go back prior to that, and you go back many, many years, the returns are substantially greater than what I've been able to do this year. So I'm quite excited about this model, and I do want to make it go live, even in this very challenging environment we're in. I think the thing to do is when I do have it go live, I'm going to have a caveat saying this is the toughest environment, and know that there's going to be drawdowns, and some of these drawdowns are substantial, so be prepared for that. And if you take 20% of your trading account and you don't mind a 40% drawdown in exchange for a much higher gain over time, then I think this model is a good fit for you. And also maybe you want to do it this way. Look how the model plays out in real time live on the site, and then once you're convinced, then maybe you want to put some of your money into the model and go by that. Because I would like investors, our members, to experience seeing what a drawdown is like in this model before they put any money into it, because the worst thing that can happen is let's say the model goes live and it goes through a drawdown right when it goes live, for over the next month. It's going to scare the hell out of people. So I want people to just sort of see it as an experiment first, and then let's say it goes live and it has a big drawdown, but then over the ensuing weeks it's going to more than correct for that drawdown and go much higher. Then I think people get much more comfortable with the dynamics, the rhythm of the model, and then want to commit some of their own money. I think this model could be very successful.
Somebody asked,
so I'm very excited about it.
When do you expect the model to go live? Somebody's asking.
Imminently, I guess is the best way to put it. My first view was I want more time, because we are in the toughest market I've seen for timing. And why launch a model that looks great but in the worst environment? Why do that? But now I'm thinking, well, I can have an explanation that accompanies the beta version of the model. So in other words, I'm going to tell everyone, don't risk a dollar right now. Just watch how the model trades out over the ensuing weeks to months. And then once you're convinced, then start investing on the model signals. I think that's the safest way to do it.
Wow, this is brutal here. I'm watching, let's see, everything just getting advanced decline on the NYC 20 to 1, or 20 to 9, I'm sorry. 2,900 rather. ADQ. Let's check the Nasdaq. Your 2050 to 690. So it's pretty brutal. Everything. My screen is filled with red. There's almost nothing up. Well, maybe Netflix. But Netflix may be topping here.
And for anyone who was wondering what the XIV model is doing today, it's been in cash. So it's not winning or losing right now.
Okay. Somebody's asking about Fit. Well, it gapped down after earnings, so, you know, what do you want? What's your stop? And were you dumb enough to try and buy it and hold it into earnings thinking it was going to go higher? I'm always amazed that, you know, people will, if they buy, like, let's say someone bought this one here and got lucky on this pullback and it ran up and it goes here and then it starts pulling back, and of course they got to buy more because, you know, they want to have that whole experience all over again. And it doesn't usually work out that way. You know, like I've talked about Sedge before, Solar Edge, and you know this had a great move, and then as it's pulling in, everybody wants to buy it coming in. And I talked about how it probably needs some time to build a base. I didn't really think it was going to be this ugly, but it's pretty ugly. And the stock is just kind of coming apart here, and it's looking like a head and shoulders. So, you know, Fit might end up doing something similar. But again, you know, understand when you have a gift horse and you don't want to look it in the mouth. You take your profits into a move instead of thinking something's going to have a huge move. I know that's the IBD indoctrination program, but it just doesn't happen in these markets. So, and Dr. I would say, you know, intuitively, I think if you're testing a VIX model in pre-QE markets, it's probably not relevant to this market whatsoever. And I don't know if we ever return to normal markets. It's something that I wonder about a lot, because
I do too.
you are also in a
Absolutely.
situation where the demographics have shifted quite a bit. Because I remember when I started in the business in the early 90s, the idea was that you were in a secular bull market because baby boomers who were in their 40s at the time were in their prime saving years for retirement. And so you have all this money flowing into the stock market, and that drove a secular move in the market. Now that whole trend is reversing, and baby boomers are taking their money out of the market because they've retired. And I know I'm towards the tail end. I don't know if you're a baby boomer. You're not, are you? You're 60.
I am. I don't know. What do you call you know when they say the millennials? I
Yeah,
always
but
thought
you're
that
not even
means
in that
people
one
over
either.
1,000 years old, and I would
Nice.
say that I'm a millennial on that basis.
I'm a millennial. Anyways,
There we go.
okay. So, but my point is simply this: I'm in my mid 50s, and baby boomers are getting to the point where they're retiring, and money they're not investing actively or willing to take on a lot of risk. I don't think. And so you reverse this trend, and I think that also changes things. And so while the O'Neill methods worked very well in what was really a secular post-World War II boom that the United States had, and a lot of it was based on its position with most of its infrastructure intact following World War II that allowed it to become that way, and that's when the dollar became the reserve currency. And so a lot of these trends have shifted, and it's going to be interesting to see how things change. But I think definitely you're in unprecedented times, and you have to pay attention to what's happening in the market right now to really get any kind of an edge, because you have to be able to see what's happening, because it's not the same as it was in the old days to a large extent.
I think what you just said rings true for every market environment, because I do remember there's
Yeah,
been
they're always
critical, pivotal moments in the market. In the 90s, in 1998, in October, there were so many people going short the market, saying the market's doomed. You know, the market had fallen like 30-some%. And I remember I was going long. In fact, I was 190-some% long. And I didn't tell people this because I didn't want people, you know, just saying what an idiot I am. And, you know, October 98, you know, that was one of my most successful quarters, October to the end of 98. So I think we always have to be in a Zen state of mind in the present with whatever the market's going to throw to us. And what makes me excited about the XIV, and I should call it XIV VXX, because it doesn't just go up. The market goes up or down. So, you know, your argument about the baby boomers, I do agree with, that this market could have more substantial corrections ahead than we are even contemplating. But you can make money on the downside as long as you're on the right side of the market. And what makes me interested in, you know, I've been working with this model for the better part of a year, and you know, the volatility is there and everything, but I need to make it tradable and workable for what, you know, that's going to make me money. And it has made me money this year. I haven't trusted it 100%. If I had trusted the model 100%, I would be up quite substantially right now. I've only taken certain trades, but I'm still up nicely. I mean, you know, to be up over 20% this year, you know, I'm happy with that. But what I like is the slippage on the model because of the vehicles it trades. If you're trading, let's say $250,000 or less on an open position, you're not going to move. Your slippage is going to be basically 0.001. That would be, that's to say 0.1% on every trade. I mean, it's minimal slippage, so it's not, it doesn't in any way impact the profitability of the model. Now, if you go back prior to this year, the profitability increases. And if you go back prior to QE, so prior to 2009, the profitability even greater than that, because you have more reasonable trends and less manipulation. So I guess my point is that I'm very excited that the market is delivering its toughest hand to me right now. You know, if we're in a poker game, this is the toughest hand it could deliver, and yet I'm up. I'm up in real time in my own account, and I would be up even more had I trusted the model more. But you know, I work this way with all my models. I get my feet wet first, and then if it starts to really prove out, like I'm at the point now where I'm going to take every signal with my own money, and therefore, now that I'm at that point, I feel the model is on the verge of being ready to go live on our website. But again, with the caveat that everyone needs to know that this model has drawdowns that may be beyond people's tolerance level. So if they're going to try their hand at this model, they really need to see the rhythm of the model and understand the drawdowns. Otherwise, they're going to sell at the wrong moments.
Dr. K, quick clarification. When you say you're up 20%, you're talking about with the model or overall?
No, just the model itself.
Okay.
Over 20%.
I want to clarify that so people understand
since
that
January,
you're using a smaller amount of your account for the model, correct?
Yeah, it's just
okay.
I isolated. If you just take the isolated amount that I'm using for the model since the start of this year, that amount is up over 20%. Now, like I said, if I had taken every signal, it'd be up substantially more than 20%.
Okay.
But keep in mind, again, you know, the dynamics of the model. You know, you keep in mind if you're up. Let's say the model gave you 130% return over a 5-month period, and that's not unusual for this model. You could also have a 40% drawdown from that peak. You know, so if you, let's say you get involved with a model when it gives you a 40% drawdown, and you know, so you throw 100,000 at it, and you've lost $40,000 of that 100,000 in say a month or two, because the drawdowns can happen very quickly. You have to keep that in mind. That's how this model works. But once the drawdown's done, to recover, go back to the original peak, usually is done within a matter of a few months. So it's a matter of sticking with the model, and I think members need to understand that's how the model works, the dynamics behind it. So I'm going to be, the model is going to be issuing signals once it goes live, and then people can see how these signals evolve and how the, you know, we're going to have that column $1 becomes, so they're going to be able to see how their investment would have fared if they had actually put real money with the model.
Okay, last couple of questions here before we sign off. It is 9:34, so I've gone over our usual hour. Somebody says, I'm a retired baby boomer actively investing. I'll wager you have quite a few. Yeah, but you're a total minority. So, and you're very rare, and I see fewer and fewer of you all the time, and you don't see any young people. Young people are suspicious of the market, and I don't really blame them. Somebody asked if the 3D printer market is dead. I don't know. You have to ask now. The stocks are dead, that's for sure, and that's really all I care about. But it's probably still a viable market. Whether it's going to grow as rapidly as people thought, it's probably reflected by the stock action, and the stocks were telling you this a long, long time ago. Anyways, I don't like this market. I'm short up to my eyeballs, and I plan to work it that way for a while. We'll see how this thing changes if it reaches a low somewhere. You do have, is the Nasdaq at the, where's the Nasdaq right now? I don't want this one. Close that up. Here we go. Nasdaq is below its 50-day. Let's look at the S&P. The S&P is approaching its 200-day, but it's retesting it now. So if we blow through it, which I'm guessing we will, that could be trouble, and the next thing you're headed for is this 2050, 2040 level in here. So it looks grim to me. I would say be careful, and if you're long anything, remember you can always buy stocks back. Don't let things get out of control, okay? That's all we got. Thanks for showing up, you guys. We'll catch you next time. Have a great weekend.
So long, everyone.